Our in-house expert, Manisha Gupta, with us. Manisha, firstly, two questions. What do you make of the decision? And the fact is that, yes, you are seeing prices drop right now, but was this to an extent something that the market had factored in and may perhaps calm down in some days?
Well, yes, absolutely. You know, it is a perfect case of buying the rumor and sell the fact. So we did see the prices gain up by 12% in last 2 weeks, and the crude prices started today with a 1-month highs. And immediately after the news came in that Saudi Arabia was not looking to extend or get into deeper cuts, you did see prices come off from +1% to -2%. And as of now, of course, we are trading somewhere in the middle of that. What the markets were expecting actually is extension of output cuts, more members joining in for the cuts, and deeper cuts as well. So we didn't get the latter two things, and that's the reason you have seen that reaction come in for prices. The other sentences, of course, are slightly on the positive side, where the OPEC minister continues to say that the framework, the cooperation between the OPEC and non-OPEC is something that has been established quite well there. They also have said about a 9 months extension, and if the need be, if the monitoring committee actually recommends that, then the extension can be taken up to June 2018 as well. So those are a couple of positives, of course, that the markets or the OPEC and the non-OPEC countries will still continue to monitor. And if the situation gets deteriorating, that is that the supplies are higher and the prices are lower, then of course they would want to come on table yet again. OPEC minister also said that the next meeting is now in November. So that is as early as they would want to start monitoring on where they are at that point.
Okay, fair enough. Manisha, just hang in there. But let's start getting in reactions as well to help you understand the impact. Azleen Ahmed, the editor of Crude Oil at Argus Media, joins in now. Azleen, you've seen the prices fall. Manisha was pointing out a very important point as perhaps this is something that the market had factored in, but this is just the initial impact of 2-3 points of exact expectations not meeting in. What do you make of this?
Yes, I mean, I think it's totally correct because we've been, since over the last week in particular, the Saudi oil minister together with Russia has made joint announcements, and even the Kuwaiti oil minister has said that the likelihood of OPEC and non-OPEC members rolling over the existing cuts for another 9 months was the most likely scenario. So that was what the market has been expecting. To some extent, yes, the market was hoping for a deeper cut that would probably give oil prices a boost. So I think that this is a bit of a disappointment because I think that the market was hopeful that there will be a more bullish decision by OPEC and non-OPEC. But I think that once things settle down, we'll probably see oil prices stabilize. I don't think that oil prices are going to start crashing because whatever it is, this decision by OPEC to extend for 9 months is still a positive thing in terms of trying to influence the market.
Yes. Azleen, hang on, please. Hamza Khan of ING Financial Markets as well joins us now. Hamza, hi. Good to have you. You know, while the OPEC minister has said that it is partially achieved on what they started to do on January 1st, but inventories are still on a higher side of 5-year average. What is your sense with 1.8 million barrel of a cut in the next 9 months? How soon do you see the world supplies rebalancing?
Well, that depends on the demand side and the non-OPEC supply side. So the U.S. alone could increase production by 1.2 million barrels before the end of the year compared to where they were a year ago. So the U.S. brings in 1.2 million barrels. Some of the North Sea producers, Canada, they add in another few 100,000. Russia doesn't complete its cut agreement, and you end up with 1.7 million barrels, let's say, being taken off the market, but exactly that many coming back onto the market.
So, Hamza, would you say that OPEC would have factored that in? And do you see that strategy changing if we actually see those kind of U.S. supplies coming into the market?
I think OPEC's great big hope right now is demand. They really need to see demand stepping in. The reason they're picking 9 months is because they expect demand to be booming 9 months from now. If it is, then I think they can see higher prices. But if it isn't, then they're going to be in a lot of trouble. And I think this is what the demand figures are becoming so important now. And so far, they're actually a little disappointing.
That's exactly what the Saudi minister actually said, that if the situation deteriorates, that means higher inventories and lower prices. Either one of that is when they would want to come back into the market. But Hamza, talk to us about the prices really. We are holding around 54 levels for the Brent prices. 50 is just about holding for US variety as well. Where do you see the prices headed with the kind of situation that we are in right now?
I think 50 is a nice round number. It's psychologically important for the market. Whenever prices go below it, you see a lot of speculators coming in, snapping up contracts. But fundamentally, we just can't see prices sustaining above $50 a barrel for WTI or above $55 for Brent.
Azleen, what's your sense? Would you agree with Hamza on the prices part of it?
Yes. Yes, exactly. I mean, our view is that in the next couple of months, we will see Brent hovering around the mid-$50. Potentially in the third quarter, we could see it go up a bit higher to maybe 56, 57, because demand traditionally tends to rise about 1.7 million barrels per day in the third and fourth quarter. But we don't see oil prices going up to $60 or averaging $60 for the second half of the year. I mean, we may touch briefly, but on average, I think we're still expecting around the mid-50s for ice Brent.
Sure.
Hamza, what's your level that you're working with? I mean, I know $60 that Azleen was talking about was the highest, but what's the level that you're working with right now in the near term?
We're looking at $45 a barrel by the end of the year.
Hamza, come in on this one as well, because when you look at the kind of output that we have, even with OPEC cutting the production, the kind of exports that still are coming in from these OPEC countries are still on the higher side, with OPEC only holding 40% of the global share and the OPEC and Alliance holding 60% of the global share. Do you still see it as a difficulty that these people will be able to hold the crude inventories or prices going forward?
Well, I can't tell the future. I can only look at what's been happening over the last 6 months. And over the last 6 months, it hasn't worked. And I don't see something fundamentally different over the next 9 months. So I don't see why it would work now, especially when the summer is coming in for Saudi Arabia. They're going to have a lot of oil demand.